Hey guys, what's going on today? Are you muted?
Hey,
Yo,
just realized I was talking on mute. Hey, everybody, what's going on? Hey, Steve.
hello Jamie, happy Monday.
And what a Monday it was. Not only is it the first webinar of the summer, since today's June 3rd, but boy, we had some crazy action in the markets today, and we'll get to that momentarily. Before we get going here, just want to make the lawyers rest a little bit easier here. Just want to make sure that everybody in attendance, whether it's this webinar or any of the other 8 that we host throughout the week, we're just here to provide you guys with educational information. If you do need advice, investment advice, what to buy, when to buy it, when to sell it, all that good stuff, please do yourself a favor and seek out a registered investment advisor or some other licensed individual like a Series 7 stockbroker that can legally dispense, buy and sell and investment advice to you.
I'll invite you
So
to lunch.
exactly, you might get a free lunch out of it at least. So just to recap here, everything we share with you guys, strictly for educational purposes only. Before we get going here, for you regular attendees, you know the drill here, bear with us. For the new folks that might be out there, might be attending for the first time, we like to give everybody a little peek at the community that we've developed around the Trade Ideas technology. And it all kind of starts off up here in the upper left-hand corner with our trading room, which is free, no charge to get in there and be part of the trading room. If you've done your research, shopped around for trading rooms on the web, you know that most of them, if they're worth anything at all, they're not free and they're not cheap either. But we make this resource available to you guys for no charge at all. Best thing about the trading room, Mr. Barry Anderson, who opens the doors about 30 minutes before every open, showcases his trading style and the way that he uses the TI technology and does a really good job at keeping everybody in line in there. When I say everybody, could be 400, 500, 600 people depending on the day. So definitely check it out if you have not been in there yet. Of course, today is Monday. You get myself and Steve for office hours. And Steve's going to take the steering wheel for tomorrow for the trade of the week. Andy Lindloff's going to ride shotgun with him. Middle of the week rolls around, hump day, Wednesday. Like to change it up just a tad and bring in the CEO and founder, Mr. Dan Merkin, along with our Chief Technical Officer, Brad Williams. Always fun and interesting there. I'd like to give you peeks of what's coming down the pipeline since they get all the developmental versions before we do even. Then Thursday is going to round out the 5 p.m. Eastern webinars with Andy's Trading Studio. And of course, I get to ride shotgun with Andy on Thursdays. Come at you with something a little bit different on Friday. We have the Growing in Popularity Friday support session starting at 11 a.m. Eastern and typically going the full 3 hours unless the crowd wanes a little bit. Of course, we are creeping into the summer months. I expect attendance to be down a little bit just because everybody's on vacation, but it's always a good place to go for anything TI related, whether it's Brokerage Plus, help with a strategy or building a strategy or just general questions. Don't forget about the Friday support session. Now, in addition to these guys, we've got TI University Monday through Thursday, Beginner 101 on Monday, Tuesday 201s, Wednesday 301, and Thursday 401s. So these all start at 12 p.m. Eastern and go for anywhere from typically an hour to an hour and a half based on the content at hand. So we do recommend that you take these in order because you'll need what you learn in 101 to build on 201, so forth and so on. Now, if you do have to be somewhere like a job and you don't have time to watch these things in real time, we've got pre-recorded versions of these as well on our YouTube channel. So since the content is static, you can do yourself a great service just by watching the pre-recorded versions. And I always like to show how everyone has responded to the introduction of AI. For those of you who may not be familiar with Holly, our AI engine, we now have 3 of those, soon to be reconsolidated back into 1. We're just not quite there yet, trying to simplify things for people. But as you can see, our user base has increased dramatically since we introduced the first AI in the beginning of 2016 and continues to grow robustly. So it'll be interesting to see what this bar looks like come the end of 2019. Also, this is a relatively new slide. In addition to Holly and Brokerage Plus, which is available to our users and anyone trading at Interactive Brokers, which allows you to use our trading interface, Brokerage Plus, to execute at Interactive Brokers. There's also the option to automate Holly strategies as well if you're a premium subscriber. So whether you're trading manually or using Holly, we just like to show everybody how the progression is going here. You know, the blue bars here are live orders filled. Of course, there's no differentiating here between is it a Holly auto trade or is it just simply what we call a manual trade that you're right-clicking and executing, market order, limit order, custom order entry formula, which is very popular as well. But the bottom line is these are live executions in blue, being routed through Brokerage Plus to IB, and of course we have orange demo orders in orange. So these seem to be on the rise, and we can only expect that they will continue to rise as people realize the value in Brokerage Plus. Even if you're not automating Holly, it's still a very robust and friendly front end that attaches to IB, and from what we've seen thus far, people are liking it a whole lot. I know I am, I know Steve, Andy, and Sean is, Michael Noss, we all love it. It just makes trading easier when you're dealing with IB. So maybe in the pipeline, some developmental versions for some other broker dealers right now, but currently IB is the only place that you can do this. So brings us to today's content. So it's that time, Steve, talking about the market recap. You know, we did have a tiny gap down. I think it's the smallest gap down I've seen in a long time on the SPYs, to the tune of about 4 cents.
Also, it was a lot worse last night, that's for sure.
It sure was. Also, hey, here we are in the summertime. Is it going to be the summers of yesteryear or completely different based on today's action? Doesn't seem like the summers of yesterday. Simply because of this little term right here creeping into the ecosphere of the markets: antitrust and tech land, social media.
Yeah, that didn't help.
Nope. And as Steve is going to point out here where the weakness is, I think it's going to be very apparent here. So Steve, if you're ready,
sure,
I'll kick it on over to you.
All right. All right, cool. So welcome to my desktop. We've got a daily chart of the S&P 500 by way of the SPDR ETF up here. And a lot of interesting stuff going on. I mean, last time we were speaking, this was our no man's land. We were in this no man's land range we talked about, and how the beginnings of this moving average started to catch some of the price actions attempt to stay in that moving average, in the trading range. Again, this was our trading range, all-time highs for the most part, down to this pivot level. And I believe this was Monday when we were talking on this day. The very next day, we broke. And the most important thing is that we closed below this range. And that's what I talk a lot about versus over here, where we spiked below and then popped back up into the range, a nice kick save, and the price bounced all the way back up midway into that range. I mean, after a fake out breakdown right there. Well, we did not have a fake out breakdown on this last Tuesday. We closed on lows, and look, we just have not been able to recover ever since. And what kind of damage has been done? Well, I said if we did break that, the next stop would easily be the 200-day. We tested it 1 day, 2 days, and now we've been 2 days closing below the 200-day moving average. Not a good thing, not a good thing at all. So let's kind of back out and look at a couple things I think are of interest to me. One is we did have another gap fill. I mean, we've made sure to back and fill all these gaps that we've talked about on the way up, and we've essentially closed them all. Gaps were made to be filled. A lot of people say it's just a matter of when and not if. And we zoom out a little bit more. I was going to do something, but we don't have this tool in Trade Ideas. I don't really use them very often, just for research, and this would be a research type of a comment I'm about ready to make here. But this is about a 60-point bounce from that low that we had back in December up to the recent testing of highs up here. And we've given back, I don't know, I'm going to guess, anybody out there with a Fibonacci tool, what is it, 31.8%? I can never remember. Whatever the Fibonacci first stop is. It very well could be that we're resting right here on that Fibonacci. I'm sure somebody's calculating that right now, but again, taking the move from there to there and then looking at the percent retracement, that's how we can calculate some Fibonacci's. And I don't have an illustration to put that on there, but I would bet it's pretty close. And I bet somebody's probably going to put a number in where that first Fibonacci 31.8 is on the SPY pullback. So that is kind of interesting. But let's look back even more. All right, let's do this. Let's go into a time frame of a weekly and start to see really what's happening here. Here's the bigger picture, kind of an inverted possible head and shoulders or a double top, whatever you'd want to call that. But a couple of things of note is when we were talking about this lower range that we broke down through, I mean, look, it was even significant back here, and there was a close right there, and a close of right there, and a close right there, a top of a wick right there, and a top of a wick. So I mean, there was a lot of significance for that level that we just talked about, where we closed below, and we've been below for a week now. So where do we draw our next orange line? Well, I'm looking at this candle right here. We didn't get close to that today. If we put something like that in here, let's see what that translates to. Okay, it's pretty close, but we didn't get that today. We'll look a little bit more left. Maybe something right there. It doesn't have a lot of congestion, so I'm not really seeing anything as significant other than this is the next low when we look at the range of candles coming in. So let's go back and take it out of the weekly time frame and go back to a daily. Oh, you know what? I want to do one more thing before we go back. The 200-day moving average, those translate into 200-week moving averages. And wouldn't you know it, or maybe some of you already noticed that, but for those of you that haven't, we bounced perfectly on our weekly time frame candles. And this probably isn't by coincidence, it's by design. The market is managed and run by algorithms and quant funds, and you have to have input into those things. And input is if, when, reach, target equals do what. And a lot of times people just keep it real simple. The target would be a buy at the 200-week moving average, and in hindsight, that showed itself to be pretty applicable. So let's go back and look at the weekly. That's daily, excuse me, and that line that we just drew. Oh, look at that. That's really interesting. We drew that line off the weekly chart, and that's exactly where this line bounced, because that's the line that we were looking at on the weekly. So maybe there's a little bit more downside meat on the bone, and maybe we will start to treat this like we've treated these up here in the past, meaning, we get a candle going into the day, and then we have a nice reversal of a wick coming out of it on maybe a late day reversal. If we could see something like that, we're referencing this point, a point of significance for sure, and if we can get kind of a reversal candle maybe in the next day or two, that could signal possible downside relief for now. But that's what the candle looks like. Yeah, that's what the line looks like that we drew based off this candle. I do see another gap to fill, possibly down in here. That's also in play. But the point is, guys, there's no real bull case to be made now. We're pretty much flipped the hat, so to speak, whereas the market was being supported and the moving averages were the 10 above the 20, above the 50, above the 200. Well, now we've got the 10 below the 20, below the 50, and they're heading down to the 200. So it's a completely tale of a different tape right now. And again, you can start to see the 10-period moving average, as I pointed out earlier, how it keeps a lid on price. And so the next time we do get a relief bounce, whether that comes down here or tomorrow and whatever, this is our key moving average again, that 10-period declining moving average. And the intraday, as prices bounce up, if they touch that moving average and you're happening to trade and you look over at the daily chart and it's right there stuck at that 10-period, you should throw up a lot of caution flags, because that's where you're running right into resistance when you look at it at that time frame. And then I think lastly, when we go back to this last chart down here, excuse me, this final line that's been in here for a while, I've had this line in here for just about forever. It's corresponding off of these volatile spikes that we had back here for the most part, and some pivot levels of things that were happening in here. So I'm not saying that's in play, but it's always nice to know what the possibility is. We would like to see the market, I think we'd all agree, we'd like to see the market kind of dig in here at these levels, whether it means filling this gap back here or testing that level. It's a sloppy range that we're probably going to pull back into. We will see. And there's somebody, of course, Bullseye Trader is giving us the Fibonacci, excuse me, 38.2. I always mix those up. 271.63. So 271.63 is going to be right about here. We'll move that line pretty much right about there. So we are close to it, which is in that gap, and where that test is low. So maybe that's our downside. It's quite possible. And then the old 50% would be a crazy drop down to 264. Yeah, roughly about there. So I think we watched that first Fibonacci level. There's a lot of things lining up. We have a pivot level here for the most part. We have that gap for the most part. A bit of a need for a relief bounce is in order. We'll see. Now, a different story in the NASDAQ. It's even more severe because of what happened today. Let's just go around the horn here. Some news out there in the macro world in terms of antitrust laws and possible intervention and regulations coming to the world of Facebook. Giant red down candle, giant volume candle. Google over the weekend was being discussed. Giant gap down, giant candle, giant volume bar. Amazon is not going to be immune from that. Twitter is not going to be immune from that. And then Apple had its own news today as well. A lot of volatility over there. So that's why the NASDAQ has been really much under pressure for the most part. And same thing goes over there. 2 days to closing below the 200-day moving average. Not a real good sign. However, look at this. This is interesting as we look at this in real time. As we look left for levels of reason and bouncing, gap filled, and we bounced right on the money off this pivot point for the most part. So that's the same date of this candle here in the SPY that we didn't quite get to today, but we sure as heck did get to it in the NASDAQ. And maybe that's enough since the NASDAQ was the one leading us down. Maybe it's able to dig in at these levels. So the weakness has certainly been in the NASDAQ. No surprise in the Russell 2000. It's been weak forever. It's under all of its moving averages and has been under the 200-day for longer than the rest of them. Moving averages are all curling over and folding down. Not exactly what you want to see there. And then the Dow, same kind of thing. Not as looked at, but well below the 200-day. We've even got some moving averages starting to cross that 200-day, but we all know that the market's looking at the S&P, and then of course the tech-laden NASDAQ. A couple of interesting items over in Europe. Deutsche Bank, I mean, you like this, Jamie. We got our 200-day moving average, we got our 50-day moving average, we got our 20 in red, we got our 10, and then friggin' Deutsche Bank's just acting like a 5-day high momentum downside action with its price action.
I love how it's going down with green candles, you know.
And go ahead and that too. Well, it's because it's a European ADR, tricks us into selling on the open, then buys it back, and all the actions happening in Europe. But really brilliantly moving averages. Usually you see the price action hitting this 10-period moving average. Price doesn't want anything to do with that 10-period, meaning it's so damn weak it can't even get near it. It's like its own 5-period moving average or something like that, just on its own merits. Not good. It's an all-time low for Deutsche Bank. This is a pretty big deal. I'm surprised more people are not talking about it. So I'm just kind of highlighting some of the negative backdrops that are out there that are corresponding with basically the price action that we've been getting. So just to rehash, last time we spoke, this was our range up here. We have in effect broken that range big time with confirmation, and we're also closing below the 200-day moving average. Not good, but maybe a reason for a bounce here in the next day or two because of the Fibonacci, as Bullseye pointed out. This level right here, and maybe a little bit of slop down here into that gap, but remember the Qs, Qs already did their deal, so that might be enough. I think we're possibly close to a relief bounce, but a lot of damage has been done technically for sure. The bulls are not happy about this. I can tell you that. That's it.
Well done, Steve. Well done. Yep, it'll be interesting. A little bit more push to the down, or is tomorrow bounce day? We'll all find out tomorrow. So let me grab it back from here. All right, you should have eyes on my desktop now.
Yes.
Let me know when you can see. Okay, so you know this is something we don't see very often. We got it's like Neapolitan ice cream up here on my index board for the ETFs. We got a little pink, a little green, a little almost green, and some dark crimson up here on the Qs, of course, where all the weakness was occurring today. So how did our AI, or AIs collectively known as Holly, do today? And I gotta say, in this type of market, not too shabby. Pretty much a long bias, and we'll see here as we, we can see all 1.0's trades, 2.0 and NEO, a few shorts sprinkled in there for good measure, but predominantly a long bias today. So, coinciding with my compare count readings that I look at after the first 15 minutes, we did have an upside bias. But when you have news like antitrust creeping in, news, blah, blah, blah. Sometimes it makes sense, sometimes it does not. Sometimes companies report good earnings and go down. Sometimes they report bad earnings and go up. So all of that with a grain of salt. It's mainly the charts that we focus on. But antitrust is a little bit different, especially when you're talking about the big behemoths, Google, Facebook, Twitter, all those guys. When antitrust comes into the equation, all bets are off. So needless to say, when I saw this, what I like to call marginal upside count, you know, just right at that magic level of 55%, it didn't just, you know, go, hey, jumping in long today. Well, Holly did. Holly doesn't know about the antitrust news, right? So she's just going to do her thing based on statistical probability, whereas we humans might have been a little bit more cautious, looking for some downside action today in that NASDAQ. But Holly, not filtering news, not even caring or knowing about news, just did her thing and was pretty much a long bias all day. So let's take a peek here at her action. So medium trade count today is what I'd call 24 trades. We can see up here 15 from 1.0, the original Holly, 2 from 2.0, and 7 from Neo. A little mixed bag here. Holly Grail 1.0, finishing the day risk on up $1.50, but during the day was up, I won't say almost twice that much, but it was probably, if my memory serves me correctly, around 240-ish. Could be off by about a dime there, but somewhere around the $2.40 level, whereas these guys were just kind of treading water down slightly. So 2.0 finishing 17 cents down. Neo, no big surprise to see this one finish a little red today, since it is the more aggressive of the trio. Pardon me there, ladies and gentlemen. Allergies are still trying to kill me. But it was really 1.0 that put on quite a show today. So finishing in risk-on mode, up $1.50 on her 15 trades, but was up somewhere in the neighborhood of 240 at some point today. So max profit is a really good column to kind of get a snapshot of what she was up the most during risk-off mode in most of these positions today. And it was the 5-day bounce. I believe it was the first 5 trades that she spit out today. She was 5 for 5 at one point on the 5-day bounce. And of course, as the market started to get weak, whether it was the SPY or the Qs, you know, coincidentally, 500 stocks in the SPY, not as, you know, laden with the high-tech firms as the NASDAQ. So, you know, we got a little swoosh in the first 30 minutes after the first 15 minutes, so the first 45 minutes, and then whoosh, we're back up here to highs. So I'm thinking to myself, well, you know, maybe long is the ticket today. But all in all, it was the Qs who, you know, went sideways and broke, dragging everything back down. But for a while there, it did look like we might head higher. But nonetheless, Holly still did pretty darn good, going predominantly long today. So let's just sort by risk on, since this is what she finished in. And we can see here what the positions finished holding to the close and how much they were up the most or at their pinnacle during risk off here. So let's just take a look at these and focus your attention over here on the winning percentages here, because pretty impressive performance in the face of a melting market. But guess what? These are the guys that decided they were going to go up today. Drillers, no big surprise there. So we got a 2.4% winner in risk on, we got a 3% winner, we got a 4% winner showing in the top 3 right here. So we do have some opportunity to look a little bit of risk on, capturing some of this spread between risk off and risk on. So in CPS here, and by the way, let's take a look at what industry this was in. Manufacturing, transportation, equipment, kind of immune to the pull of the techs getting beat up. So CPS, really nice entry here. A lot of things I like about this chart here. Pardon me there, ladies and gents, just trying to save your ears from my coughing spasms over here. So obviously a buyer in CPS. We got 1, 2, 3, 4, 5. So for the first hour and 15 minutes, the buyer is buying it right up here. We get this little period of consolidation for about an hour. Holly calls a nice buy signal in it right here. I like it because it it precedes this little break point right here, and I'll just put a line here. So nice sideways action. Holly calls the buy right here. Another quality I like about this play is, you know, here we got the fast line, the 10-period SMA, things staying clearly above it, which is always a good sign. In any case, little sideways action here, and then boom, boom, boom. Not immediate gratification, had to wait it out for a little bit, but eventually this thing gets traction. So we've got statistical probability from float on bringing it to us. Let's see, where did my panel go? There we go. So let's just pull it up over here. We're already on Holy Grail here. So float on came into the day with 61.3% viability. So when we come back here and look at CPS, that's a nice way to start a trade. Hey, we got the odds on our side. About 15 minutes later, what does it do? It comes up here and breaks this opening range. So if we wanted to be aggressive on this one, and by the way, let's take a look at the volume today. Finished with a healthy relative volume. Not the best, not the worst, but a good 50% above average. And we can see here, it probably slowed down a little bit. Looks like it came in right at the 3-month average here. So at least it was doing a little bit above average, which is always a good thing. So we could either stick with it right here or bolster the position here. Had we done that, we would have been pleased about that. Even sets up one more little time here before it makes its last push into the top here, and then gives back a little bit before the close. And notice what it does over here. As soon as we start creeping back down to this 10-period SMA, once we get that close pretty close to it, that's when it gave it back up a little bit. Geez, sorry guys. So all in all, just a very nice, clean, crisp trade out of CPS. But on the risk on perspective, you know, we could have easily made the decision here. You know what? It's been going up since we got into it. Either get out of all of it with Holly, take her recommendation on risk off. We could keep it, hope to get more out of it, or we could always do half and half, which is my favorite. Let's get out of half with Holly. This one would have kept you in nice and clean with a break-even stop on that second lot, which is always my favorite way to approach trades. Once you get up a certain amount, cash out half, set that break-even stop, would have kept you in it for the remainder of the day. And whether you got out up here, or, you know, back down to flat, you know, that break-even stop would have kept you nice and safe. Next on the list here, not near as much of a spread here, only 13 cents to speak of, but not a bad entry from Holly right here. We do get the immediate gratification here of as soon as shortly after we buy it, pretty much off to the races here. Holly, why did she exit this one? Timed exit, okay? So not the best exit. She gave back quite a bit from the top here, but hey, 33 cents, nothing to sneeze at here. How much could she have made at the top? So this is almost kind of a better gauge right here. We only got a 13-cent spread between risk off and risk on here, but we've got more like a, let's see, 27-cent spread, 26-cent spread here between 33 cents and 59. You know, when it was up here, we could always check out the daily and go, well, is this thing about to run into some resistance, right? So the peak of that candle is going to be over here, butting up to the bodies of these candles, where right here, at this peak right here, we were butting up against this wick right here. So, you know, still a pretty good indicator. Yeah, okay, I like it up here. I'm going to exit, butting up against these wicks here, and maybe if you kept half, use that break-even stop, which once again would have kept you in, and you get back over here and you're like, okay, now it's tickling the bodies. That might be all the room that it has today. All right, so looking to the left on the daily, always a good idea. Hey, what do we got here that we had in the other trade? There's that 10-period fast sign, keeping the tempo once again. What happens when we get a close below it? Well, same thing that happened in CPS. So always a favorite metric. Of course, it was Mr. Gomez who turned me on to the fast line, and I want to thank you for that, Steve. It serves me and everyone else very well. So if you haven't been watching the 10-period simple moving average, ladies and gents, get that thing on there. It's great for momentum. All right, another oil stock a lot of the times, but not always. When the markets are soft, we have oil and the associated stocks going up. Classic case in DO today, Diamond Offshore. like this one a lot. What do we have here? We got a little push, buyers present. We get a little flattening period here. Not these wicks up here kind of, today they acted as a tell, right? So we wick back down, pretty much consolidating right here. Holly gives us the signal. Little sideways action here. Timed exit. A lot of the times when these positions do this, Holly will pull the plug prematurely on a reduced risk or a profit save. Did not happen on this one. She made it the duration. Now, shaded area pretty much flats it out. Let's see here, or 11 cents. I was looking at USCR there. But 11 cents, hey, not the best, not the worst. But once again, we got this flat line. Nothing to get scared about. What are my eyes going to focus on? Hey, we've also got a potential range break brewing here. What was the volume like in DO today? Considerably above average. Most of these smaller time frames were well above average as well. So we got a lot of positive attributes here. We've got statistical probability from Holly. We've got a potential range break that could and did occur. And then we've got high volume, right? 3 very good characteristics in a long trade. So once again, whether we kept all of it, half of it, or whatever ratio you like to adhere to, a nice 30-cent spread in between risk off and risk on DO. An opportunity, could have done it here, could have done it over here. Once this range break occurs, get a little sideways action for additional 45 minutes, and then push, 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 high into the close. Once again, 10 period, fitting that like a glove, all right? So some pretty good opportunity here in risk off. And then we have USCR, which once again was a float on trade. Float on is simply meaning low public floats. Typically from float on, it's going to be 20 million shares or less. What do we have here? We had slightly above average volume, but it is a low floater. So even when it's just average volume, these things can get some nice steam behind them. So USCR, what do we have here? We get a little push to the upside, and then it capitulates back down to the break-even line. Pretty much just ebbs and flows right there for the duration, all right? So by the time Holly makes her exit here for a flat, we can't even really go, hey, we're gonna use the break-even stop. You either stay in this one or you bail. Staying in this one today would have paid off because it just ebbed and flowed right around the entry line. The 10 period giving us a little comfort there to stay in as we wick down and close back above, wick down and close back above. And you pretty much had to wait the entire duration to get the move here going into the close. But if you did that, you were rewarded. Couple more, one more here, it's interesting, 0.32, 0.31, and the IVZ. When I see this one, it's no big surprise. This stock is notorious for, wiggling a bunch, whether it's in our favor or against us. So let's see here, 0.31 cents once again. Nice entry at first, off to the races, yay, and then a little bit of grumbling as we come back down to that entry line, which, check it out, perfectly adhering to the 10 period. Get a little bleedy right here, but not too bad. Still way above the entry line here. And then it catches here and pushes it higher into the close, all right? So once again, could have bailed with half on Holly, could have kept the whole lot. Break even stop's not gonna do us much good here. So, not really a whole, we can say, yeah, we could have stayed in this one, but anytime we see action like this, it does get to us a little bit as traders. But bottom line is that if you would have held the remainder or a portion of it, you would have been rewarded. Just probably a little bit more of a worrywart, so to speak, than the other ones that we just looked at here. All right, so that's pretty much the highlights for risk on for Holy Grail, which was the big performer here, doing quite well in a very uncertain and tricky market today. Not really anything to speak of down here. We do have one example of a risk on coming from NEO, a difference between a -4 cent loser, got a little 30-cent spread in there between -4 and 34. Actually, that's 38 cents, excuse me. So let's take a look at this one. This one a little bit more harrowing. Buyers in it for sure. Starts to go sideways like some of the other ones that we just looked at, but this one takes a little bit different of a course before it heads higher. Holly taking her loss here. She does reduce the risk on this one as this ebbs and flows sideways. Gets out about right here. And then we even head down a little bit further, but good news is the hard stop never got hit. So that's what hard stops are there for. A lot of times, just like getting out of a winner too early and we're kicking ourselves for, leaving considerable money on the table, sometimes we're going to close a loser early only to see the stop not get hit and it turn back up. This is a perfect example. So that door swings both ways. But if we did stick with the hard stop here, next candle green, getting back up to that 10 period, whooshing down again, but closing right above it. And then we get this final close above the fast line and then bam, 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 off to the races. So once again, if you decided to stay in this one, stick to that hard stop, you got paid. But hey, it's going to get us from time to time, just like closing that winner early. Sometimes we're going to close that loser early and it's going to turn around and go for us. That's why, that's why hard stops are invented, ladies and gentlemen. When we place that bet in the form of a stock trade, this is what we're willing to lose. Sometimes when we close it early, just like Holly, it's the right thing to do. And sometimes it comes back to bite us. And this is a perfect example of one of those that had all of those characteristics about it. So that is it for Miss Holly. Pretty much cut and dry, nothing really to go over in 2.0. Let's just do a little time check here and get on to the rest of the content matter here, because we're going to go a little bit off the beaten path today. So we just talked about Holly. Usually I like to showcase the range breaks that have the massive volume flowing through them. Not that that's a guarantee of anything, but it's always a very nice attribute to have in a range break. It's not the holy grail, but it can be the great equalizer. But coming into today, we had some knowledge about antitrust. And we even knew the companies that antitrust was directed at. So we're going to take a look at how we could have participated in that if we were patient enough to wait for things to set up. Twitter and Facebook are great examples. These are not from my turbo brakes up and down or the turbo brakes, no resistance, no support. These were just on the radar because of the antitrust issues that were in play. So let's just go back to the 5-minute here. And let's take a look at how Twitter's set up, because it's pretty much the same song and dance that I always like to talk about. It's just that the volume levels weren't off the charts like we're typically used to seeing when we're talking about these range breaks that come from turbo up and down. So here we are looking at Twitter on the 5-minute, a little push to the upside, and then whammy in the next 15 minutes, getting all the way back down to this level here. And then we just build a nice little camp here for a good period of time. Going right along, and then bammy right here, okay? This is where the break occurs. This is where we could have made our entry. Even had plenty of time to get it in the next 5, 10, 30 minutes or so from there. But this is technically the first one. Let me just put a little arrow there, just in case people are having a hard time seeing my screen here. Let's see, flip me around, there we go, okay. So as we can see, that first little penetration was right there. And 5, 10, 15 minutes, this is the prior 15 minutes, this was our risk. Acted like it might get up there, but eventually could not do it. Finally, they release the hounds and whoosh, we go down, all right? Even another little setup towards the close here. If you like to press things or wait for things to set up, if you had the fortitude to sit this whole down move here, then we did the same thing that we did up here, just in a little bit nastier of a capacity here as we ebb and flow from about 35.28 to 34.60. But eventually, sellers come back into play and get this nice little push into the close. So Twitter, antitrust, one of the instances where the news actually made sense. However, we have to be a little patient sometimes, and it took quite a while. Took about an hour and 45 minutes for this trade to set up, but hey, patience pays sometimes. So some really good shorting opportunity today in Twitter, and pretty much the same thing in Facebook. All right, a little bit bigger of a range here. We got the bottom being put in here. We get a nice lengthy consolidation period before this one took even a little bit longer, about 2.5 hours. Of course, Twitter's already taken the plunge. So if you're monitoring these stocks, should be a matter of time. And then Facebook and careens on down. Not really a second opportunity that we saw in Twitter here, but two really nice releases, Facebook and Twitter, based on what's coming down the pipeline. A little bit different, whooshed all the way down here and just kind of inchwormed along. Myself and a lot of other people were going, oh, it's breaking now, but didn't really get that much of a release before popping back up here and hugging that line. And look, ran into some pretty gnarly, alleged support levels over here. But we'll see what happens tomorrow. So Twitter and Facebook set up nice and paid. Google gave you a little bit of potential to exit here, but in the end, crept back up to the entry line. So, tomorrow, antitrust ain't going. Definitely have that in the back of my mind here. When reality in the form of antitrust and technical analysis collide, you never really know what you're going to get. All right, so once again, those were not on my typical radar, but because of the macroeconomic events, they were today. Now, let's talk about the good old bread and butter, because these guys were all over the place, and there were some really nice ones today coming through turbo down shorts. Now, these guys right here, turbo up, family no resistance, same theory, but they have to be at all-time highs. And then we have the downside version, same theory, but they have to be at all-time lows. Not a whole lot of quality coming through these. We had a lot of symbols coming through, but the timing was all whacked out. You would see things that have been careening down for, 45 minutes. They weren't exhibiting nice consolidation patterns. That's the way that I like to play these. So even though we had a lot of symbols coming through them, the timing was very much off on these two windows, but it was not on the regular turbo breaks down. So let's take a look at some of these setups that it produced today. And as you might have already guessed, Techland, right? What else goes hand in hand with, the hardware that runs the social networks, right? We got Intel, all right? Make sure I'm looking at the right time frame here. So Intel getting a little wicky, putting in its bottom here, top up here. Eventually, what do we have here? We've got whoosh. We got this breakage of the period right here. All right, sorry, my eyes are playing tricks on me there. So we got the break right here. Here's our risk area. Why is this the risk area? Because we're looking at the high of the prior 15 minutes. These are 5-minute candles, so let me just expand out a little bit. Everybody doesn't have to squint so much. Entry candle as this range is being broken. Intel's a nice thick stock. Shouldn't have been any problem getting a fill in Intel. 5, 10, 15 is our risk. Never even acts like it's going to go up there and tempt it. And we get a nice downside push. So we've got a tiny risk area. We've got a nice juicy reward area. Whether you just took the first clip and said thank you very much, still very nice risk to reward. If you're patient, which, hey, nobody likes to sit wiggles like this, but maybe you just went away and came back and saw down here. But whether you covered it here or whether you covered it here or into the close, a really nice short setup on Intel. Let's see what Intel's volume was today. Slightly above normal. And that's the way Twitter finished. And let's just take a look at the way Facebook. Now, Facebook did have monster volume today, 4.22. Where's Twitter finishing very similar to Intel with a 1.38. So Intel was a real nice clean one. And if Intel worked, you might have already guessed, AMD set up pretty nice today. And of course, these patterns come in all, range breaks come in all shapes and sizes. Notice how much energy was expended getting down to this level right here. All right, because we have to include the wick here. Candle bodies right here. That's really just your own, actual candle body right here. Wick here, not that big of a difference. So we did have, let's see, 5, 10, 15, 20, 25 minutes or so leading down to this break. I usually don't like to see that, but this one worked anyway, just wanted to illustrate, even though we did have a nice 25-minute downturn here, didn't care. Once it busted this level, boom, all the way down. Pretty much pain-free trade here. So even if we mark this first reward area, we've got a big fat reward area, much smaller risk area. You know, maybe if you were patient, you got some of this too. But all in all, you know, once Intel caves in, and we see this happening with AMD, by the way, 2.33 is what it finished at, so nice volume in AMD today as well. Let's see, we also had this guy right here, nice and clean, right? I love these patterns, right? Seller's obviously there, seller takes a break, buyers and sellers become equal, boom, nice clean break here. We get a little sideways action. You know, if this was Holly, maybe she would have pulled the plug early, reduce risk or profit save, but we're not Holly. That's not bad action to have once we make an entry, and then release again, one more release. So a very nice controlled march down of selling here, nice big fat reward area and a tiny risk area, and that's what we like to see. Hey, check it out, 2.69 in cyber for the day. Now, I do want to show one that looked really nice, but guess what? They don't all work, even though they look beautiful. All right, so TDoc, Teledoc, you know, the thing that everybody's raving about. Hey, now when I just have this cold, I just have to get on the phone and get online with a doctor and say, yeah, antibiotics. Well, check it out. Looks very similar to what we just saw in some of these other nice ones. You know, nice downturn, buyers and sellers become equal. We get the signal here. Ah, it looks good. 15-minute risk here, nice and tiny. But in the next 5-minute candle, wham, jumps up here, barely gets us out before turning back down and working beautifully. As Steve would say, second mouse got all the cheese on this one, right? Stopped us out right here. You know, nothing you can do about that. Why did this occur? You know, why is this big green 5-minute candle in there? Only reason I got for you is in that first 5 minutes, or in that 5 minutes, a bunch of buyers came in. But having said that, you know, closed this one even closed above that 10 period, but we're looking at the 5-minute here. Let's see what it looked like on the 15-minute. Well below, never even coming close. But in the opening minutes, or the first half of the day, I'm a 5-minute guy. What can I say? But anyway, just wanted to give an example of one that doesn't work, you know, and the bottom line is if we would have gotten short at 55.05, you get stopped out for 55.45, just magically coinciding with about a 1% stop there. Okay, so you know, a lot of these things, a 1% stop will keep you in sometimes, and a lot of the times you need that 2% stop. It's just the nature of the algos running these stocks a lot of the time. And lastly here, PFPT, another high quality, you know, look just like the TDoc, very similar to the TDoc, except this one doesn't have the anomalous 5-minute burst there. And once again, seller's obvious, takes a little break, goes sideways. We get short here. Took a little time to finally release, but hey, that's okay. Not coming anywhere close to our stop area. And then just a nice orderly descent here. You know, I would say, you know, trying to get this a little bit right here, probably not worth it. So just a nice orderly sell off here. So we get a nice big reward area here. And we got a nice small risk area here. So all in all today, it was a short seller's paradise in my opinion. All you had to do is be patient, wait for the setups. Once again, they're not all going to work, but out of the 6 that I just showed you that look very similar to this, with the exception of, what was it? Was it AMD or ENB? Yeah, AMD. Even though this one expended quite a bit of energy getting down here, still worked. Teledoc looking like all the others. But as we all know, they don't all work. We're going to get stopped out, you know, a good percentage of the time on some of our trades. But depending on the pattern that you play, it could be 70% win rate, 80% win rate. But just wanted to give an example of one that did not work and show you how the risk parameters work there, keeping them nice and small. So having said that, let me just take a look here. Let's see if I missed anything. No, don't think I did. Don't think I did, which gets us to the end of the content matter here. So, you know, right on schedule here. So if there are no questions, let me take a look at the panel here. Is there anything I need to backtrack on? Let's see, Steve's got them all answered.
I was going to give Randy a scan that he's kind of asking about. It's hard to kind of explain how to do it, but there's something you might like that I think is what you're asking about. So I'll drop that in the chat window for Randy.
Sure, there's a lot of different ways to answer that question. You know, you might have noticed that some of the patterns that I was just showing here were doing exactly that, right? We make an entry here, or after the down push here, we get this sideways consolidation. A lot of the times, we're going to be able to find these as they're hitting lows. So imagine if we see it right here hitting the low, and then we get this consolidation. That's after the fact, though. Of course, we've got, you know, Steve's going to drop something in there for you. We've got consolidation alerts. We've got different ranges that you can play with to dial in, you know, a consolidating stock, you know, making it say, you know, in essence saying it can't be above this level or below that level, which creates, you know, in essence a range. So a lot of different ways to skin that cat there. And Aman is asking if Turbo short a trade idea scan of some sort, new thing to this group. It's one of my tried and true windows. It's something I've been using for years, which brings up a good point here. If you want to try out turbo breaks up or down, or the derivatives, which are the ones with no support or no resistance, best place to get those is just to come over here to the channel bar, go ahead and click on channel 4. And what you're going to see are all these windows pop up. And these are all of mine, Steve, Andy, and Sean's favorite alert windows, top list, compare count windows. So you can see right here, turbo up family, turbo down family, no support, no resistance. Turbo breaks down, which is the one we were just looking at and showcasing today. So, and turbo breaks up is in there too. So if you want to try these windows out, just cruise on over to channel 4. Once you find the window that you want, just right click, save it to your cloud like so. And that way when you pop back over to your default layout, all you have to do to find that window and spawn it and make it part of your default layout is say load from cloud, and you'll see that window sitting right up top there. So that gives you the opportunity to take all these windows I was just showcasing, put them on your desktop, and see if they're going to be conducive to your trading style. All right, looks like that does it, guys. So Scott, if you're ready to walk us out, let everybody know how they can save a little bit of dough, either upgrading or signing up for a new subscription. We are ready for you.
All right, sounds good. Yeah, just a couple items as we wind up the webinar. There's a great ebook available. If you don't have it yet, make sure you get a free copy. It's got 5 ways to win in a post-BTFT market. 5 strategies. Each strategy is a chapter. Jamie and Steve both contributed chapters. So go to trade-ideas.com/ebook. Put in your email address to get that download link if you don't have it yet. There's a podcast. We released a new episode last Friday. We do most Fridays. You can subscribe so you get the newest updates by searching for Trade Ideas Podcast in your app and subscribing. That works in most of them. Holly in June, all caps, is the code that's good for this webinar this month. 15% off your first month or year of any Trade Ideas subscription or Brokerage Plus. You can also use this to upgrade from standard to premium if you decide you want the extra goodies in premium. Just plug that in when you do an account status change from your account management tools. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. Facebook.com/TradeIdeasPro is the Facebook page to like and share what we post with your friends. Info@trade-ideas.com is the best place to ask for support questions. It goes right into our help desk software, so your question gets routed to the appropriate team member to help you out. Thanks everyone for attending. We'll get a recording up later on tonight or tomorrow morning, and you get an email update tomorrow about this time with a link to the playlist where you can find it. Thanks everyone. Thanks Jamie and Steve. Have a good one.
See you tomorrow.
Hey, thanks everybody. We'll see you tomorrow. Bye-bye.